The 200-week moving average, in all of the history we have for it, has always been trending up, has triggered the beginning of bull markets, has called bottoms in bear markets, and it's saved us from big potential bear markets that ended up starting new rallies as well. Kind of a mix of the previous that I listed. This time, if we look at what's going on with our 200-week moving average, none of those prior four statements I've made are still true. So that's 5 quick facts for you that tell you something very important about this 200-week moving average, and I need to really break down for you what the implications of this are. Now, as usual, this is going to be the exact same ruthlessly honest content that you've come to expect from this YouTube channel, so you guys already know the deal. You know, if you don't like hearing truth bombs, if you don't like confronting reality in order to make well-informed, safe, and profitable decisions, get the fuck off the YouTube channel. And with that out of the way, do me a favor, if you do like those things, smash up the likes and make sure you're subscribed as well. This 200-week moving average has legitimately saved Bitcoin many times. People have been using this line to buy Bitcoin and feel confident in doing so. And crucially, because it's such a long-term view of what's been going on in the market, it's always kind of indicated the direction of the market. You know, again, 200 weeks is essentially 4 years of price action. So this is an average of the last 4 years of trading. That's why the data starts right here, by the way, because the chart starts about 4 years prior. And that is a very important fact to keep in mind right here, because it's always been trending up. And with very long-term moving averages like this, you can actually you can do this. You can hide the chart entirely and just analyze the price using these kind of moving averages, or perhaps doing something a little bit like this. And I'm just doing this to show you the actual power of these moving averages. This red line right here represents the 50-week moving average, and it, broadly speaking, is going to be tracing the price action that we have on this chart. If I put the price action back on, you can start to see that this red line, broadly speaking, follows all the price action. So the longer you zoom out, the more you're going to be expecting that whatever the prevailing market direction is, which in this case is upwards over the last basically more than 10 years, is going to be represented on a moving average, right? And that is so important, because if you start seeing a line like this accelerating and getting much more steep, that's a strong indication that things are actually really strong, and they've been really strong for a long time. But if you start to see that actually this line is leveling out, okay, that this line is actually starting to flatten out a little bit, well, and if that's happening on such a large time frame, that is potentially telling you something very dangerous about the market. And if we keep looking at the market with that lens just for a second, right, and you guys know the deal, I'm not a perma bear, I'm not a perma bull, I just do and say whatever the market is telling me, right? If it looks like we're going up, I'm going to trade the long side. If it looks like we're going short, I'm going to trade the short side. If it looks like we're going down, I'm going to trade the short side. You guys know the deal. I have absolutely no problem trading the market in whichever direction it's going, right? But just sticking with this hat for a second, when you consider that this moving average now is actually a little bit weaker than what we've seen previously from the very same moving average, just given that it's leveling out, that means that if you start printing other very bearish weak signs, that that could potentially put you in a lot more trouble. And that's what I'm seeing right here. This weekly candle that we're in right now, it's not actually correct on this chart. Let me show it to you on a different chart. This is the true price action. We're still quite far below this 200-week moving average right now, and I would like to just let you guys know, I mean, where I am in the world in Europe, it's still Saturday, but it's Saturday night, all right? And so tomorrow's going to come around, and this weekly candle right here is going to close. And if we close anywhere basically below 22,460 roughly, if we close anywhere below that, we are going to have a conclusive weekly close below our 200-week moving average. And granted, this has happened in the past. This is not the first time that we've actually closed below the moving average, but take a look at the circumstances that happened in before. Now, again, before I continue, this is something that I heard of on 𝗪𝗙𝗦𝗧𝗍's channel. So he actually is somebody that I've learned a lot about trading from. I've attended his workshops personally, and I've learned a lot from him. I think he is a really, really cool guy, and I'm so fucking privileged to even call him my friend. But he is as well. So if you do like my content, then please check him out before coming back to this video. But what he actually pointed out is right here. We did actually have a series of candles closing below the 200-week moving average, right? So this isn't completely uncharted territory. However, one of the big things he mentioned is that the moving average was a lot more aggressive at that time. It was quite aggressively moving up. You can give a little bit more leeway to things like this happening, to little oopsies situations like this happening. Give a little bit more leeway to that, when the moving average is quite aggressively moving higher. But you just wouldn't want to see stuff like this when it's not, because again, it's another thing that makes it easier to maintain support on the 200-week moving average, but unfortunately we weren't able to use it. And again, the long list of implications that this moving average has on the market right now, is potentially just starting to become a little bit more obvious to you in this case. The thing is that this is basically the first time we've seen it looking this bad. I mean, with the moving average leveling out, falling below it, falling, in this case, quite substantially below it as well. I mean, if we close at our current price, we're closing 5% below the moving average, and again, just to bring us back to the one time that this happened in the past before, I don't think, I'm going to calculate this because I haven't actually checked this, but I don't think we closed substantially lower than the line. Let's take a look right here. This was probably the biggest one. That was about a 0.78% drop. This was a 0.8% drop. This, depending on where you draw it, is a 0.4% drop. So we are quite a few percentage points lower below this moving average line. Again, unless some sort of miracle happens tomorrow, which is entirely possible, but obviously just not super likely, we are going to be setting history here. And the thing is markets, just like what happened previously when we did temporarily fall below the moving average, markets can, kind of fake this out, and it can be little fake outs that end up getting recovered. But when you keep forming things that are first signs, when you keep Bitcoin plunging below a prior all-time high, that hasn't really happened before in long bull cycles. It did happen before once, but it wasn't really a real bull cycle, and we've already discussed this on the YouTube channel, so make sure you are hitting that like button and staying subscribed as well. It's so important at a time like this that you don't miss content like this, and of course it's totally free anyway, so please do take advantage of that. I try and make this content worthy of very, very large payments, but then still deliver it for free so that you guys get amazing content. And if you want to be able to keep getting more of it, then the only way you can do that is by subscribing. This, when we're forming all of these firsts, that potentially is a sign that we are transitioning into something that could be much worse. And I don't want to be the bringer of bad news and saying depression and stuff like that. That's just not my place to say. I'm a technical trader for cryptocurrencies, and that's basically it. I'm not an economist, so you shouldn't be getting that information from me. But those are just my thoughts. If we are potentially transitioning into something, well, it would be no surprise that we're suddenly starting to show all of these things that are not actually quite nice happening for quite a while. And the thing is that if we are actually showing this much weakness against the 200-week moving average, I mean, this is basically meaning that we are potentially about to lose an area of support that we've literally never lost before. I mean, we haven't ever lost this area of support before on the 200-week moving average, and as far as I know, this is pretty much one of the longest term popular support levels that Bitcoin has that exists for its trend. I mean, the 200-week moving average is pretty much the longest term thing I've ever seen used on this chart. And to lose something like that, not only does it mean you then have to eventually potentially come back up and tackle the very same area as resistance, which could be so disastrous for the market. It really could just turn things into an absolute disgusting shit show. But it also just means that it might take a really long time. If the market has enough weakness to lose such a strong area of support, well, it might have enough weakness to just keep dropping down for a long time, and so on and so forth. And so in a lot of ways, it represents a lot. It's quite, one of the things I like in technical analysis, it doesn't happen often, is when you can use just one piece of data. In this case, the average of the last 200 weeks of trading. That's it. That's literally what this moving average means. You can take one piece of data and it can tell you so many things all at once. I mean, that is very cool. That's one of the reasons I like my EMA ribbons. It's one of the reasons I like my Ichimoku cloud, and it's one of the reasons I like my basic support and resistance levels. Like this right here. I mean, it's basically it for the very, very same reasons. And so with this indicator, potentially now, being, fuck me, it's scary to say, but turning into resistance, I wouldn't, I wouldn't want to be too closed off to the idea of quite a long-term, at least 2024 to begin the new bull market, just purely because of how we've never done this before, and it could be a sign that this is going to plunge a lot lower, and that is genuinely something that I'm thinking about. I mean, it's not something that, again, I think is super likely. I still fully stand by what I said, as recently as probably yesterday or something, or I don't know, maybe a few days ago, where I'm always talking about how, look, I mean, yes, obviously everybody hates crypto in the market right now, but it doesn't take a lot for the market to get very, very excited. I mean, look at how quickly a lot of these rallies can and have taken place. It's actually not the most unrealistic thing in the world to say that by Q4 this year that things are in a substantially better position. It can change really, really quickly, and that is something which I think is just quite important to be keeping in mind at this time, because obviously it's getting quite easy to be swept away by all these bearish waves. And again, my job with this video, or just with the analysis that I was doing when I was looking at this, is simply to be aware of all the facts, to be prepared for any eventuality, have a plan set, have an action plan ready to go, so that I'm safe, so that I can be responsible and sensible with my funds. Obviously, that is my primary focus, and that's what I try to do in my trading. We've been able to trade these markets a little bit over the last couple of weeks, just with the volatility here, and if you want to jump inside of VIP to see exactly how I've been doing that, down to all the exact details of where I'm entering, taking profits, setting my stop losses, and why I'm choosing those levels as well. You're getting the detailed explanations for everything as well behind each decision. Check it out by clicking on the first link in the description down below. That's going to take you to my free Telegram channel, where you're getting more analysis from myself and my team around the clock, completely free of charge once again. And then to get everything that I just mentioned, you can click on my name and then click on send message, and just ask me how to join VIP. This is the only way you can reach out. If you search my name in other ways, you're just going to find impersonators who will scam you. So please just use the links on this YouTube channel. Very, very important note right there. And we are running a discount which is about to end. So if you want to take advantage of that, they are literally some of the lowest prices ever. Yearly members, just want to remind you guys, will get phone calls with me as well, which has been very, very useful for a lot of people. If for that alone, it is, a yearly package is basically, as far as I can remember, at its lowest prices ever right now, because they're cut in half, and Bitcoin is effectively cut by 70% as well. So quite worth checking out before we do increase prices back to normal, or actually above normal, because Bitcoin has dropped so much. So we do actually need to raise prices now. So check that out before all of that very nasty stuff happens. Obviously, we don't want to be talking about stuff like that. Back to the charts right here, though. Potentially something much longer. The thing for me that's potentially concerning, right, is that these first signs. It's not just in the crypto space. I mean, I was listening to Peter Schiff, very, very knowledgeable. I don't know if I want to call him a narco-capitalist or just, very, very knowledgeable free market capitalist guy. Really, that's the only way I can describe him. I was just listening to one of his podcasts. He's very anti-Bitcoin, to be fair, but he's very, very knowledgeable about the economy. And one of the things he brought up that I hadn't even noticed, although actually it's quite obvious, is if you look at indices like the Dow Jones Industrial Average, and I don't even know if this is it. this is not it. Yeah, I've just completely chosen the wrong chart there. That's somewhat embarrassing. If we look at the weekly chart, you can start to see just how horrible it's been, really, for the Dow Jones right here. If we measure these candles back up to the most recent candle that's closed, that is 11 candles, and we've basically, 12 candles, and we've basically seen all but one of them being red. So that's 11 out of the last 12 weekly candles that have been red candles for the Dow Jones Industrial Average Index, which is quite important. Obviously, this is an index of apparently industrial companies in the United States, and for this to just continuously be dropping pretty much for 11 out of 12 weeks is quite horrific. One of the interesting facts that Peter Schiff brought up is that the last time this happened was right at the beginning of the Great Depression in 1929. He does love to scare the old people that listen to him. Bless him. He's definitely someone that just gets off at fear. You know he's getting the lotion out when he knows that old rich men are getting very scared at what he's saying, and then throwing their money straight into gold. We all know that's Peter Schiff's wet dream, but nonetheless, he has a good bloody point. He has a good point, and I don't want to discount it. Jokes aside, I mean, obviously he is a little bit of a intense personality. I do really like the guy. I think he's super, super cool. I mean, you know, out of anyone I could have dinner with in the world, he'd be in like the top 10 that I'd have to consider. You know, but bottom line, you know, at the end of the day, this is bad stuff. You know, I mean, we basically saw the same thing with Bitcoin, but the fact that this has happened to the Dow Jones as well is actually quite shocking. And you know, I mean, it doesn't really get better if you look at other indices as well. Obviously, we don't want to look at the candle that hasn't finished trading yet, but right here it is basically the same thing. This is the last 11 candles, 10 of them bearish. So you know, quite a statement there for the Nasdaq index as well. You know, obviously, is this the Nasdaq index? I don't even know the numbers. The names keep changing. You know, I know obviously these are indications that short term there could and should be a rally, and I still believe that to be the case even for Bitcoin. I'm still expecting you know, at least a $22,000 Bitcoin, if not potentially much closer to a $28,000 Bitcoin. You know, short term, I think these rallies could happen, but when we're forming all of these signs, and you know, I mean, they just don't, you know, you don't casually throw up signs like this if you're just gonna fake out and then magically recover back up. We very well could do that, and I would love to see it, but let's be honest, ladies and gents, these kind of things, you know, I mean, sometimes it's time to, sometimes you really are transitioning into something you don't want to, and you know, if that's what we're doing now, and I am not drawing that conclusion because I just don't know. I don't know if we are heading into something like that. Well, again, you know, this might be a bear market for Bitcoin that does end up lasting a little bit longer than what we might expect, and you know, once more, if that happens to coincide with you know, losing what is basically Bitcoin's, in my opinion, strongest support level of all time, you know, this 200-week moving average, and now we've lost it. Well, you know, I mean, if we're seeing similar quite horrible signs for the indices markets and so on, does it really mean that Bitcoin in 2 years could recover? Could it be much longer? These are only questions. I'm not a doomsday person, to be honest. I mean, I'm entertaining these questions with a pretty light mind. I'm not worried about it. Bitcoin just always seems to climb its way back up into beauty, and once more, again, it can and has risen pretty much as quickly as it's dropped right here. It could very much do that again at any point. Obviously, it could do it from much lower, from 10,000 up to 30,000 perhaps. You know, it might not be like now from 20,000 to say 40. You know, we might not see you know, the rally up starting from such a nice price level, but the rally will always come, and just the fact that it's hard to believe right now makes me so confident that in the short term, you know, that we are probably going to get something that's a little bit more exciting than what we've seen so far. However, again, it's just these little signs right here that I do want to be making sure that we're following up with, and that we're not brushing off lightly, because this isn't something that's light. You know, it is something that is quite important. Again, it's not the first time we've dropped below the moving average, so we're not totally in uncharted territory, but it is certainly the worst occasion of doing so, with quite a lot of warning shots fired simultaneously, especially seeing that this moving average is leveling out as well, which also is something that I heard from 𝗪𝗙𝗧𝗜𝗔𝗟. It's totally not something that I considered whatsoever until I watched his video. So again, I'm learning from his stuff and highlighting it on this channel. So if you do like my content, you must go watch him as well, just because it's it's just better, really. I gotta be humble and say it when it's true, ladies and gents. I will. I have no problem pointing you towards sources that are phenomenal, and that is one of them. And so that is something that I'm going to be watching as a potential long-term development. Right now, could we recover? Absolutely. It's so possible that we could. I think there's a lot of reasons that we probably wouldn't. However, it always looks that way when you've just basically finished what is, in this case, I mean, let's just measure this now. This was also 12 candles, and again, same as the Dow Jones, really, just the last 11 out of the last the last 11 out of 12 candles. I'm sorry, that English is poor. 11 out of the last 12 candles, that is accurate English, have been red. And the one candle that actually wasn't red was still quite a bearish hammer. So really just I'm counting this as 12 bad candles in a row. To be quite honest with you guys, I mean, I don't even know how I would label this candle. I'm not quite a big fan of it, but it's not so bearish, so could be a sign that momentum is changing just a little bit, and I am inclined to believe it. That's quite a big wick, and to see the candle traveling up even just a little bit is a good sign. I can't lie, it is a good sign, So short term, obviously, I can see quite a few good reasons to be bullish, but long term, I don't think we should have dropped down this far. I don't think we should have entertained the idea of closing down below the moving average. I don't think that any of this should have happened while the moving average is leveling out. Bottom line, the market has done something that shows that is basically, this is a big display of weakness, really. There's no other way to put it. There's no way to sugarcoat it. That's exactly what I'm seeing, and there you go. I don't have anything more to say about this. All I can say, though, is that if you do want to trade this on the very same platform that I'm going to be using, Bybit is, of course, the place to be, and you're going to be getting over $4,000 by signing up to my link in the description down below and following the steps right there. So if you do want to get over $4,000 up to 4,100, all you got to do is sign up to Bybit using my link in the description down below, and then go ahead and smash up the like button as you're heading on down there. Make sure you are subscribed as well. You will get that free cash right there. And if you want to jump inside of VIP, take advantage of our discount before it's over, get some phone calls with me pretty much whenever you like, as many as you like. We've never had anybody abusing it, so we don't put any limits on it. You can do that by, again, clicking on the first link in the description down below, and then clicking on my name at the bottom of any post inside of 𝗪𝗪𝗏𝗏𝗏𝗏𝗏𝗏𝗏, and then clicking on send message to ask me how to join VIP. Very cumbersome process, but at least it puts you into a private chat directly with me. Really hope you have enjoyed this one. You know what to do. If you have, hit up the likes, subscribe, tick the bell, and I'm out. Bye-bye.